Good day, my name is Christelle from Frans the Klerk, Independent Technical Analyst. It's this time of the year again where we want to have a look at the movers and shakers of 2022. We cannot not start with the top 40 index. And for months, we've spoken about this head and shoulder formation that kept many investors nervous. But once that left shoulder changed into a support, the warning was off the table and the index reached for new targets. And that head and shoulder formation has become a falling wedge formation. Once that left shoulder changed into a support, that falling wedge formation took this index even higher than the target of the falling wedge. And at the moment, it's trading there around 68,520, which is higher than the target, which means what is the next strong resistance that the top 40 index can go to? And that is waiting there at around, on a line graph, 69,650. If we go back to a candle graph, that all-time high is in the week of the 28th of Feb at 71,816. So at the moment, we can see that the momentum to the top is clearly in place. My 40-week moving average, that long-term sentiment gauge, has changed into a support, which means the long-term sentiment is positive. My strong support that I'm going to highlight that needs to remain in order to sustain the momentum, because remember, nothing goes up in one line. So as the instrument pulls back, traders or investors start to take profit and the index declines. The big question is, how low can it go? So my next strong support is waiting there at 66,227. And then the next strong support is waiting there at 63,996. So these are the strong support levels that need to remain in place on the top 40 index to sustain the momentum to the top. Obviously, if we look back at history, we can see, there was clear, strong buying power in the dips of the last 2 years, despite all the negativity and the news that, could have made things a lot worse. But we could see that investors make use of the dips to protect this index to higher levels. Let's see if it can go back to that record high. And then obviously, once that top changes into a support again, it becomes a brand new, almost like level. And then we can use Fibonacci levels to say, hey, what is the next level my index can go to should the momentum to the top continue? And that is waiting there at 77,407. That is the possible next target of resistance, assuming that top changes into a support again to reach, and that is the 161.8% level on the Fibonacci. Let's look at gold. Many investors, because of the uncertainty, wanted to run to gold, but we know that investors ran to the dollar. That's why the dollar was so strong at times, but many investors haven't forgotten about our strong gold. 40-week moving average is tested and remained a resistance. That is seen as negative. My 40-week moving average is that green light for long-term investors, saying once that level changes into a support, the sentiment changes to positive. And that is a good indication to start to accumulate for the long term. Now, strong resistance was found there around $1,800. My 40-week moving average exact level where it's waiting is at $1,792. And the strong next support is waiting there at $1,700. Now, ladies and gentlemen, I don't know how low this gold price will retrace to, but should $1,700 remain a support, in other words, even if it pulls back to a little bit, let's say 1,725, for example, and it starts to turn around again, I might be sitting here with a beautiful inverse head and shoulder formation. But I'm maybe running ahead of myself here because I know the dollar is very strong. We've seen a little bit of weakness, and some investors might want to move their capital rather from the dollar back to gold again with this possible inverse head and shoulder formation, or make use of the fact that rally, take some profit on the rally on the dollar, and maybe go to gold again. If this level, the $1,700, changes into a resistance again, in other words, this instrument starts to trade below it, And this support here at $1,643 changes into a resistance again. The optimism is off the table. And then our view will change completely and say the momentum to the bottom is in place. The neckline, as I said, is waiting there at around $1,800. Nice round numbers to remember for the gold price. When those levels changes into a support, and I'm going to be greedy, what is the target of this possible inverse head and shoulder formation? It's the full length of the head projected upwards from the neckline, can take gold possibly back to $1,950, assuming the neckline changes into a support and assuming $1,700 remain a support on the gold price. That 40-week moving average is critical. Should this remain a resistance, this testing of the 40-week and the retracement can be seen as a technical negative goodbye keys, and that is seen as very negative. Then we can see a lot lower levels possibly. So keep an eye on gold. I think this is one that can maybe surprise investors. Silver. Also a commodity that many investors found interest in. Why? Because of the volatility since about 2020. I mean, if we go back to the history, we can see, found beautiful support there around $12 and a clear lamp formation all the way up to $28 in August. From March to August, massive rally. The percentage here from March, 122%, the rally that silver has gained. So a lot of investors became aware of silver again and wanted to make use of the volatility to trade it. It's caught within a falling wedge formation. So a falling wedge formation is a positive formation once that upper band changes into a support. And that is waiting at around $22.78. Now we can see it tested that upper band every time and retraced. Tested the upper band and retraced. So once there's enough buyers to change that upper band into a support and keep it one, can we say the falling wedge is in play? The target of the falling wedge is the full width of the falling wedge projected upwards from the upper band, taking it back to around $28, which will become a brand new recent record high. All right, my 40-week is a 40-week moving average. That red line is a support waiting at $21.22. And that is the level that needs to remain in place in order to sustain the momentum to the top. So I'm just looking at this falling wedge. Some might even call it a channel rather. Why? Because this mouth of the channel and the tail of the channel almost look the same in width. And that might be called then a descending channel rather than a falling wedge. Because with a wedge, your tail is a lot bigger. So it looks like that. All right. So with a channel, your mouth and your tail is the same in width. All right. Bitcoin. I almost want to say Bitcoin has been in the news every week this year because of the volatility and because many investors said this thing will never go down. And if you hear that word, then you have to be careful because you can never use never on any listed instrument on any exchange, even if it's a market maker. All right. So what has happened here? Ladies and gentlemen, a beautiful example of a technical negative goodbye kiss on Bitcoin. A beautiful example of an ugly head and shoulder formation that warned. A beautiful example that once that 40-week moving average changed into a resistance, the orange line for Bitcoin was flashing. It pulled, it bounced, tested that 40-week moving average. And we have seen profit taking after profit taking after profit taking from where that technical negative goodbye kiss appeared all the way back to the low, 59%, and went even lower in November, a 66% drop. That's why technical analysis can be used as such an important tool in your investment strategy. Because it tells you what the informed capital think. It tells you, are they optimistic about this instrument or not? And especially with currencies, cryptocurrencies and even currencies in itself, because there's no really financial statements that get published and you can see the debt or the assets of the company, technical analysis shows you what other investors think of the instrument. And we've said before, the only thing that makes a price rise is when there are more buyers. And the only thing that makes a price drop is if there are more sellers. And by using technical analysis, you can see who is the strongest. Is it the buyers or is it the sellers? So at the moment, we can clearly see on Bitcoin lower highs. That is negative. It tells you that every time this instrument bounces, somebody is taking profit. So one, we need to either see a turnaround pattern. We need to start to see higher lows on Bitcoin, or inverse head and shoulder, double bottom, tweezer bottom. We need some indication that the buyers are making use of this dip to protect this currency pair for upside. My 40-week moving average is waiting at 25,817. At the moment, my strong support that needs to remain in place is waiting at 16,310. Below 16,310, I can assume that the momentum to the bottom can continue again. My strong resistance, that might be my first sign of strength again on Bitcoin, will be waiting above 20,907. Above that level, some of the buyers can take a sigh of relief and say, hey, maybe the buyers will get along and start to protect this price. Otherwise, we can continue to see lower levels on Bitcoin. Something I also just want to mention, if we go even further back on Bitcoin and ignore that head and shoulder formation, this was a possible double top formation that warned on Bitcoin, saying that, listen, should this neckline change into a resistance, that this instrument can go a lot lower. And ladies and gentlemen, if you project that target, it takes it back to zero. So it doesn't mean it has to go there. Nothing is a guarantee. It's all about possibilities and probabilities. But that it was a massive warning formation as well, to say, listen, expect some downside, that the sellers are keen to take some profit here.